Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. As we take a look at Monday's trade action, starting off a new week, a report week in front of us here, we saw mostly mixed action after it was all said and done and the dust cleared on Monday's trade, lower in grains, a little bit higher in livestock. Here to walk us through the trade and provide analysis on the show today, we bring in our good friend DuWayne Bosse of Bolt Marketing. DuWayne, Happy New Year to you, buddy, and congratulations. Go Jacks. I know you're a big SDSU guy, winning the national title on Sunday.
Yeah, that was a whole lot of fun yesterday. There was a lot of football yesterday and in the weekend, and yeah, that was a good game. I was very happy to see them do that. Of course, NDSU is the pinnacle and the top of the mountain that everyone tries to be. So to actually come back this year, beat Montana State in the semifinals, who beat us out last year in the same spot, and then to beat NDSU was kind of a storybook ending for us. So I like the way that one went today, and got up and was able to do markets today, so I didn't even celebrate that much. So.
Well, I don't want to slight our NDSU listeners. They had a great season, and it was a great game. And as you mentioned, they're the pinnacle of the FCS there. So it was a fun game on Sunday for sure. And again, congrats to SDSU on their first championship win. All right, football aside, we got to talk markets. And last time we talked to Wayne was well before the end of the year. There's been quite a bit that's happened. And coming in here this week, we got a January report coming up on Thursday from USDA, typically a very big report. It's going to be an interesting week, but Monday's trade kind of just fell off the cliff a little bit. We were higher through the overnight, kind of mixed to higher all day in grains, and then by the end, we're down a little bit. I mean, what happened, Wayne? What do you think?
I think you almost got to think back, like you said, it's been a couple of weeks since we've talked of what has happened in that time frame. We ran up during the holiday sessions on that lighter volume. Really no bears to speak of. We had a hot, dry Argentina forecast. We ran up to some really nice highs and came into the new year then and corrected all that last week, even though Argentina is still hot and dry. So, and it's almost like the positions or the market just squaring up positions. Let's see this January report and maybe see how the Fed acts this year and some of this corporate earnings we're going to get in January, and then we'll trade from there. But so yeah, that's kind of what set the table for today. And then over the weekend, the forecast came out hot and dry for this week for Argentina, but the midday run you had mentioned, turned out just a little bit wetter, for the extended forecast for Argentina. So that maybe took the top off this market, but I'm a little disappointed in corn and soybeans today. The hot, dry forecast for this week, I would have thought we'd have, maybe beans up 15, corn up 5 to 7, and just never even got there today. And yeah, maybe we're position squaring for this big report on Thursday, but I'm like, gosh, we're doing that Monday morning, Jesse. It's going to be a long trading week.
Yeah, you are exactly right. Well, yeah, we were talking off air before we jumped on about that midday model run for Argentina. I mean, outside of that, and maybe, like you said, a little position squaring, just a lack of fresh news in this market. So then, maybe some of those items take a little more weight here in this trade. And I'm with you, though. A bit disappointed in quarter beans on Monday, and just interesting, as you alluded to, a lot of fund liquidation last week, getting into the new year and getting out of the holiday trade, and it made for a rough week last week, and now here this week, I'm with you. It feels like we're just kind of squaring up and could be fairly quiet here going into the report.
Right. And there's one more thing we are seeing quite a bit of is farmer selling.
Yeah.
You always see that going into January. It's actually, I think, the second largest month when it comes to total grain sales by producers. And, and probably especially this year, there was not a lot of grain sales at the end of 2022 calendar year because there was pretty good high sales for the most part of the year. So we're kicking the income to the next year. And weather's okay now after the Christmas storms. The guys are moving some grain. We talked a little bit in this office this morning about the higher interest rates and how that changes. If your line of credit is now 7 or 8%, man, if you're hanging on to grain and have a line of credit, well, geez, you need a significant rally just to pay for that interest cost. So, you know, if producers are going to call me and ask me what should I do, even though I'm generally friendly to the market, I'm going to say, you should go ahead and sell, and we can always buy it back later. Don't pay those high interest charges. Well, all that farmer selling last week is put pressure on this market. Now, a couple of weeks ago, once we saw March corn dip below 650, we saw those commercials come in as big buyers. And I want to say they're going to do it again, but if farmers are selling, then they don't have to be buyers on the board. And, you know, last week managed funds were big buyers in corn, or at least decent buyers. So I like seeing that as, you know, we get in the new year. They obviously feel that corn's got a good base underneath it. But yeah, if we got that farmer selling in here, it's just going to be tough to rally. But let me also say, if we sell a bunch of that grain now, you know, you could have that significant rally in spring and summer if you can wait that long, because farmers won't have the grain to sell to stop a market on a rally. So, but yeah, I think farmer selling is also part of it, this position squaring we've seen the last 2 weeks.
I'm glad you brought that up, because my mind was going to go there too during our discussion. Just the, you know, we get to that new calendar year, and as you alluded to, moving some of that income to 23 at still very good prices. And you know, I look at where this market sits now after Monday trade, and thinking back to before the holidays, pretty much where we were before the holidays. I mean, just below 15 in old crop beans and corn, 650 mark, wheat, you know, it's doing wheat things. I mean, you know, it's kind of like, okay, we had that roller coaster ride. Maybe you took advantage of something during the holidays before the sell-off last week, but we're right back to where we were before Christmas, DuWayne.
I know. And you know, that lack of fresh demand. We didn't see any export sales announcement this morning. You know, soybeans, we're seeing some every once in a while. The weekly export inspections report is still lackluster for corn. So every time you don't rally, I understand, you know, some of the bearish stories on corn is going to be just lack of demand. And we'll see if USDA trims demand as much as people anticipate this week. You know, maybe I've heard people talking 50 to 75 million bushel cut in corn exports, and maybe some cuts in ethanol. And yeah, lackluster demand. Well, we should have lackluster demand when we're at 650. And I'm glad you mentioned the higher prices. You know, everyone knows I'm generally the guy who's friendly to the market, maybe not crazy outright bullish, but friendly. I feel like we got support underneath the market because of the tight stocks, old crop stocks. But as producers call, and if they start talking to me about like, geez, I'm running my spreadsheet and I'm looking, this is a lot of profit potential here. You know, we protected it last year for a while. We got out of hedges. Now the market's rallied here. If they're itching to sell, boy, just I don't stop them, because they're looking at great profit potential here. And, you know, that's who needs risk management if you've got enough money already made that you don't need it. So just go ahead and sell. So that's fine too. So like I said, just a lot of farmers selling, a lot of uneasiness here, putting pressure on these markets. We need some sort of new story for the bull like me. I mean, I need the drought in Argentina to continue or to expand in Brazil, or God forbid, China step up and start buying some of our grains. That would really help. But I still think this Argentina drought is worse than we're anticipating here. And the production cuts will continue to come, and that'll support the soybean and soybean meal market moving forward.
Thinking of stories too in the market. I'm not saying this will happen. I'd love your thoughts on it here, but just some of the protests in Brazil over the weekend.
Yeah.
I think that could, if it continues on and lingers on, could that affect Brazilian exports in some way to China? Would that send China back to us? I don't know. That's totally conjecture at this point, but you know, thinking it's going to take some sort of story like that, I think, to really feed the bull here in these markets right now, DuWayne.
Well, right, because Brazil is going to have a huge soybean crop compared to last year. South America in general, year over year, will be bigger. You know, remember last year they had a drought in both countries and it really pulled it down. But you're right. You know, when we saw this election happen, and as close as it was in Brazil, we knew there was going to be riots and protests. And sure enough, that's starting to happen. You can pretty much guarantee, you know, harvest is starting in Brazil. After a while, it'll be, you know, truckers blocking roads, and, you know, we can't get the soybeans to the. So that's probably a story that probably does come up, Jesse, and rallies the market. And we're not going to be able to shift demand over to Argentina to buy beans, because we're already starting to count on Argentina's going to have to buy some beans from Brazil just to keep their crush plants going. So yeah, that's probably a story that does happen. And I'm not as worried about the Brazil crop size. I mean, I am, but Man, that's an old story, Jesse. I mean, we instantly, when Brazil started planting these acres, we went, well, that's going to be, 150 million metric tons. So we're already there. I think it just gets trimmed down. But yeah, there could be a story of like, will they get it out? Eventually they will get it out, but there's going to be some trucker strike. And we got to remember, this new president, he's not a huge fan of China. So there could be years down the road where China's not thrilled with Brazil and they're coming to buy from us too. I think the bigger story is that China coming out of their COVID lockdowns. Yeah, I know that means a spike in COVID cases right now, but eventually they get back to living the way they used to be. I think their protein supplies are fairly low, and they may have to buy some beans from us come spring, summertime anyway, even with a big crop out of Brazil.
DuWayne Bosse, Bolt Marketing, is our guest analyst here today. DuWayne, as we look at the January report coming up on Thursday, and we were talking just where some of these price levels are at here currently, thinking of all the farmers selling we've been seeing, been hearing about. For those who maybe haven't sold or just kind of saying, oh, I want to see what the report looks like, what would you recommend to them ahead of this report? Should they be looking to lock in some floors here just to protect any downside risk? Because I know some of the pre-report estimates I've seen lean a little bearish, but then again, who knows what we'll get from USDA on Thursday, DuWayne?
Yeah, it's really going to depend on the individual and the risk tolerance they have. Younger producer that, is lucky enough to still have his grain, but like he said, maybe he's got a line of credit that's out there. Oh man, I'm going to push pretty hard to, maybe even weekly put options or, an option for next month just to get through the report. I've always been big on the weekly options during USDA reports. They've gotten more expensive lately because, more people look at them for one and the volatility of the market. But to spend 10 to 15 cents on some sort of weekly option in a report that could move the market limit one way or the other is just smart risk management. So, for that younger producer, absolutely, an older veteran of the trade and traded markets for a long time and farmed for a long time, one of those guys that probably has money in the bank and grain in the bin, he can probably just go through it without any risk. Because I am that friendly that, we're getting all these, sell stories, farmers selling great crop in Brazil, and we're still not really crashing this market, Jesse. It doesn't make my bullhorns grow, but it does make me at least a little bit more friendly. If I can just go through this, I really think come springtime, of course, I'm looking at a huge snowpack out here in the Dakotas again. If we have some prevent plant acres, we could have issues. I know that probably sounds silly to so many people out there because we went into the winter so dry, but I don't know. Here where I am, a drought is done really quickly, and all of a sudden we have problems getting the crop in the ground again. And I guess what I'm trying to say is there's going to be an acre battle, Jesse, I think, and it could be quite interesting. And we might see the start of that on Thursday when they announce the total winter wheat acres planted. If they were higher than normal, or higher than anticipated, that's just less acres for corn and soybeans then.
Well, and if they were higher than anticipated, the other caveat to that is how poor of a start that winter wheat crop has had this year. I mean, those ratings are just not good, DuWayne.
No, that's just it. Even if the winter wheat acres are 1 to 2 million higher than the trade is anticipating, okay, that should be bullish corn and soybeans right away. And then we're going to go back to talking about, but it's crap and we're going to disc it up and plant corn or beans anyway. So we're going to keep the stories flowing here in 2023. I know today, for me, the market feels a little bit quiet and dead. We didn't move anything, but it's going to be a volatile son of a gun this year. So buckle up, I guess.
That's good advice. I would agree with that. Let's move over to livestock, DuWayne. Cattle, hogs, fairly strong showing on Monday. It was a rough week last week throughout the protein sector. I know demand has been dismal there. But you look at cattle, you look at hogs, overall this protein sector, I'd say start with the cattle market. I mean, what are you feeling here as we get into this week here and really start to sink into the month of January?
I really still like the cattle market. Yeah, like you said, we had to pull back a little bit last week. Cash cattle trade fairly heavy volume on Friday, but a little bit lower than the week prior. That always disappoints the market a little bit, but you also look back to a report we had last week, the weekly weights report. Slaughter weights were down substantially. So that the storms we've had, these recent storms really kind of took their toll on the cattle. So they're not finishing quite as heavy as we want. But, you also get to a week and a half ago when you're at at the high price levels we are, well, feedlots will tend to move the cattle pretty fast too. So had the dip in the market, but I really like the trade response today. We had a really light volume profile area around 160.5 in April cattle. And I felt like we just had to go back and fill that area a little bit. We didn't really fill it too much, but we touched it and we generated more buyers again. So I think that's a sign of a bullish market that just had to correct a little bit of the overbought position, pull back to that 20-day moving average, fill that volume profile, and really kind of go up and away here today. Everyone would love to see an up limit move all the time, but we just can't have up limit moves all the time. So now this was a good market, strong market. Feeder cattle, the same thing. I think, once we get the snow out of all the feedlots like we did last week, now guys are in there buying, and now these sale barns are going to have some big runs, and I think the prices are going to be very good. So look for that market to stay strong too, unless corn takes off on Thursday. So that's another caveat there for the feeder cattle market. But yeah, as bullish as I am this cattle market, Jesse, I am looking out to next year, September, October, November feeders, this 207 to 210 area. There's some LRP insurance, there's put options. I know, they can get fairly expensive, but guys got to remember, you're $20 or $30 above where you sold your calves if you sold them in November. So, and that was a good price when you sold them in November. So there's nothing wrong with locking in. We talk about risk management a lot. That's just smart risk management. Who cares how bullish everyone is? That's just a price worth locking in there, or just protecting at least.
Definitely. Hog market, I know this February contract, we've taken plenty out of it. It's been at a big premium to the cash index. What's your thoughts on hogs? Decent day Monday, but this hog market's been under just a lot of volatility as of late.
It sure is, man. That thing, we drove down to 82, we spike up to 92, and I'm scratching my head wondering why we're that high. And well, boy, we couldn't get through that resistance. And you're right, the cash hog market is quite a bit lower than the February contract, so we've had to drop sharply to correct that. We dropped for 7 sessions in a row until today's session, where we're up a little bit, but it still doesn't look like a very good session to me. Yeah, we had some triple-digit gains. It sounds good, but I don't know. This market's pretty tough. Exports have been good for about 3 weeks in a row, so I do look for that to continue to help. But right now, in the short term, the weights actually increased a little bit on hogs, or they stayed the same around that 290 for the slaughter weights. That's just a little heavy. Actually, the storm's kind of backed up hogs, I feel like, so maybe a little bit more production there. They're all inside, so it's not like the weather really hurt the hogs that much. It just hurt transportation, so it's a little opposite effect of the cattle. So still a little bearish this hog market. I just don't have a lot of good to say other than the solid exports, which eventually will help. And U.S. dollar made a 7-month low today, so that's kind of where I'm disappointed that grains can perform better. So keep that dollar going lower. Everything will help eventually.
Very true. DuWayne, real quick before we let you go, any final thoughts you have for us today?
Yeah, I think we should see a rebound tomorrow in the grains. Like I said, I'm obviously disappointed in the trade today, but you get that rebound. If you're one of those guys wondering about selling, feel free to sell it here. And this is coming from a bull. It's okay to make money. You don't have to feel guilty about it. It's good profits. If you don't want to risk that January report, don't risk it, because it's a crazy one. I won't have positions on myself. I'll just see what the numbers come out, and then we'll adjust from there and have a whole different story next week to talk about.
Fantastic. DuWayne, if folks want to reach out to you, get a little market advice there at Bolt Marketing, what's the best way? Yeah,
well, they can just call us directly here, 605-448-2365, and they can always check us out online at boltmarketingllc.com.
With that, DuWayne Bosse, Bolt Marketing, always a pleasure, buddy. Thanks for joining us. We'll get you back on the show soon. Have a great week.
Sounds good. Thanks, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.